Investing in dividend-paying stocks is one of the most effective ways to generate a steady stream of passive income. By carefully selecting companies with solid financials and a history of consistent dividend payments, it's possible to create a reliable income source that requires little day-to-day management. I've been fortunate enough to build a portfolio that generates $1,000 per month in dividends. In this video, I will share how I achieve this through 3 specific stocks. While the strategies and stocks I use work for my financial goals, it's important to remember that every investor's situation is different, and what works for me might not work for everyone. Still, I hope to provide insight into how dividends can contribute to financial freedom and what it takes to get there. First and foremost, it's important to understand the basics of dividend investing. Dividends are payments made by companies to their shareholders, usually on a quarterly basis. These payments are essentially a portion of the company's earnings distributed to investors. Not all companies pay dividends, as some prefer to reinvest their profits in growth opportunities. However, many mature, financially stable companies offer dividends as a way to reward shareholders. Dividend payments can provide a sense of security because they offer a consistent income stream regardless of market fluctuations. For me, this predictability is invaluable as it provides a way to cover monthly expenses or reinvest in other opportunities. The first stock that plays a significant role in my dividend income is a company that has a strong reputation for being a dividend aristocrat, which refers to companies that have raised their dividend payouts for at least 25 consecutive years. I chose this company because of its history of financial stability, even during tough economic times. This particular company operates in the consumer goods sector, which has been an attractive area for dividend investors due to the essential nature of the products they sell. People need consumer staples such as food, beverages, and household products regardless of the economy's ups and downs. Because of this stability, companies in this sector often generate reliable cash flow, which can be returned to shareholders through dividends. When I initially invested in this company, I took into account its dividend yield, which is a key metric that tells you how much income you can expect based on the current price of the stock. The dividend yield is calculated by dividing the annual dividend payment by the stock's price. For instance, if a stock costs $100 per share and pays an annual dividend of $5 per share, the dividend yield is 5%. This yield provides an idea of the income I can expect relative to the price I pay for the stock. I always make sure to reinvest dividends I receive from this company, as doing so allows me to purchase more shares over time, which then generates even more dividend income. The second stock in my portfolio comes from the utilities sector, which has long been a reliable choice for dividend investors. Utilities companies provide essential services like electricity, water, and gas, and their income streams are typically stable because of the constant demand for these services. These companies are often regulated by governments, which limits how much they can charge customers but also ensures that they generate predictable revenue. The utilities company I've invested in has a long history of steady dividend payments and has consistently increased its payout for over 2 decades. This track record gives me confidence that the company will continue to pay dividends and possibly even increase them in the future. One of the reasons I decided to invest in these particular utilities company is because of its relatively high dividend yield. While companies in this sector don't always experience high growth in terms of stock price, they are known for returning a large portion of their earnings to shareholders in the form of dividends. The yield on this stock is higher than that of many other sectors, and this is a key factor in helping me reach my $1,000 per month goal. I also appreciate the stability that comes with owning a stock from a company providing essential services, as it offers a sense of security in both good and bad economic times. I regularly reinvest the dividends from this company, which further accelerates my portfolio's income generation. The third stock that helps me reach $1,000 per month in dividends is a real estate investment trust, REIT. REITs are companies that own or finance income-producing real estate in various sectors, such as residential, commercial, and industrial properties. REITs are unique in that they are required by law to pay out at least 90% of their taxable income to shareholders in the form of dividends. This makes them particularly attractive for income-focused investors like myself. The REIT I invest in focuses on commercial real estate, particularly office buildings and retail spaces. While this sector has faced challenges in recent years due to changes in work habits and retail shopping patterns, I believe the long-term prospects for commercial real estate remain strong. The REIT I've chosen has a diverse portfolio of properties, which helps mitigate risk, and it has a solid history of paying and increasing dividends. One of the things I like most about REITs is the high dividend yield. Since REITs are required to distribute such a large portion of their income to shareholders, the yields tend to be significantly higher than what you might find with other stocks. The REIT in my portfolio currently offers a dividend yield that is well above the market average, which is a key reason why it plays such a big role in my monthly dividend income. Additionally, by investing in a REIT, I get exposure to the real estate market without having to directly manage properties, which would require much more time and effort. The dividends from this REIT provide a consistent income stream, and I reinvest a portion of these payments to purchase more shares, further boosting my future income potential. Now that I've discussed the 3 stocks that make up my $1,000 per month in dividend income, it's important to emphasize the role of diversification. By investing in different sectors such as consumer goods, utilities, and real estate, I'm able to spread my risk and reduce the chances of being overly reliant on one company or industry. Each of these sectors behaves differently depending on market conditions, and having exposure to various industries helps protect my portfolio from significant downturns. Additionally, these stocks all have a history of raising their dividends, which helps protect my income from inflation. Over time, even small increases in dividend payouts can compound into significant income growth, especially when reinvested. Another key factor in achieving this level of income is patience. Dividend investing is not a get-rich-quick strategy, but rather a long-term approach to building wealth. It took me several years of consistent investing and reinvesting dividends to reach the point where I now earn $1,000 per month. Along the way, I've had to remain disciplined, even during times of market volatility. There have been moments when stock prices have dropped significantly, but I've held on to my investments because I know that the companies I've chosen have strong fundamentals and a history of weathering economic downturns. By staying focused on the long-term picture and consistently reinvesting dividends, I've been able to grow my income over time. Of course, there are risks associated with dividend investing, and it's important to be aware of them. Companies are not obligated to pay dividends, and there have been instances where even well-established companies have cut or eliminated their dividends due to financial difficulties. That's why it's crucial to thoroughly research the companies you invest in and make sure they have strong financials and a commitment to returning capital to shareholders. Additionally, while dividend stocks can provide income, they may not experience the same level of capital appreciation as growth stocks. This trade-off between income and growth is something each investor must consider based on their individual financial goals. So, generating $1,000 per month in dividend income has been a rewarding journey for me. By carefully selecting dividend-paying stocks in sectors like consumer goods, utilities, and real estate, I've been able to build a diversified portfolio that provides a steady stream of passive income. The key to success has been patience, discipline, and a long-term mindset. While it took time to reach this level of income, the rewards have been well worth the effort. Dividend investing has allowed me to create a source of income that requires little ongoing management, giving me more freedom to pursue other interests and goals. For anyone looking to generate passive income and achieve financial independence, dividend investing can be a powerful tool. But it's important to do your research and choose investments that align with your individual financial situation and goals. So, what do you think of our video? Let us know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.